Hey guys, this is Alan Minnick, your local mortgage consultant in Charlotte, North Carolina. Just wanted to give you guys a quick video breaking down something that is unique to real estate investing. If you are thinking about buying right now or are interested in possibly investing in real estate, I think that's a great decision, and I want to talk to you guys about the power of leverage today. So just going to highlight a couple things for you, hopefully get it all done within about 5 minutes so I don't keep you too long. But here first is my Facebook page. You'll be able to find any information that I'm putting out there on this page, and you can always come here, ask me a question if you need to. But just want to give you some general information about the Charlotte market as well. If you go to Google and type in average home price in Charlotte, North Carolina, you're going to find this Zillow page, and you'll see right now the average home listed through Zillow in the Charlotte market is about $212,100. So that uncovers all of Charlotte. It definitely is a seller's market still, but this summer it was a lot hotter, so it's a good time to buy. Things are ticking down. But as far as owning a home, the investment that it is for you, here's where we want to look. So again, you see that average price through Zillow. There's a forecast of about a 6.5% annual appreciation for the market of Charlotte. So that means on average a home is going to appreciate at about 6.5% over the next year. Now that's without any improvements, doesn't take any of that into account. So if you put more money into it, you'll definitely see the value. So you can see where we're at. Here you see we've got a little bit of a low point as well. And the market is kind of leveled off, but it's projected to go higher. So this fall is a great time to buy, especially before it takes that next uptick. But let's use these numbers. Let me show you firsthand what the power of leverage can do. So I've already got this in a system or a tool that I use to kind of show you or illustrate what leverage means. And really the power of leverage is essentially in real estate, you don't have to pay for the entire property to own it. You can put down 20%, yet you're still listed as the owner on a property. So when you go in turn to sell that or rent it, you have 100% access to the money coming back to you. No other investors saying we get a piece of that. Where when you pay for stock, you have to pay, if a share is $10, you pay all $10 and you get the 4% interest return. Real estate's a lot more powerful than that, and that is the power of leverage. So here we've got a $212,000 home. We're not paying for land in this scenario. It's a built home already. So that's our our base cost there. And let's say in this scenario you're going to put down $10,000. So that is 95% loan to value. Your loan of $202,000 is 95% of $212,000. So in this scenario, we're going to run and say you've owned the home for 3 years, and the Zillow feed showed about a 6.5% annual appreciation. I'm going to run this at a conservative 4% just to show you the amount of value that's going to be there. So just based off of that, the annual appreciation of the home, you're going to gain about $8,480 per year just on 4%. Of an annual appreciation rate. So your mortgage is $202,000 at the start. You're making a principal and interest payment of about $1,179, and that rate is about market right now, but things are continuing to go up, so the sooner the better. Here's a breakdown of some other costs: real estate taxes, property insurance, just some repairs and maintenance. If you don't want to cut your lawn, repairs or other things, maybe buying a new washer, and then mortgage insurance. Mortgage insurance is something that you essentially usually have to pay if you don't put 20% down on a property. This is an annual amount, of course, on this situation. So all that's rolled into your total annual expenses. And here you can see your 12 months of those principal and interest payments. So all that together is what you'll spend throughout the year. Part of that money is going towards your principal, which means it's going directly towards your loan, not your interest. So you're actually paying down the amount of your loan. So your loan in 3 years, paying that per year, decreases to $194,407. Now, take into effect the appreciation per year, 4%, $8,500 roughly per year, times 3, your new value of the home is up to $237,440. That's not putting anything extra into the property. That's just the market at this point. So, at the end of 3 years, you're actually looking at $43,000 in equity. Now, to really get your return on investment, you have to subtract the initial $10,000 you put in for a down payment. You're just getting that money back. So really, your net profit, or your net profit in this scenario is about $33,000. That is a return on investment of about 330%. Now, I dare you to go find a stock that's going to give you that return on investment and give you the opportunity to create that much cash for you. The good thing about that is 33% can easily be a 20% down payment on your next home. So if you guys have any questions about that, give me a call, 910-217-2993. Again, this is Alan Minnick, your local mortgage consultant in Charlotte, North Carolina. I look forward to helping you with all your real estate investments, whether it's buying your first home or if you're looking to gain that next property to make more money. So if you guys want more information, again, reach out to me. I look forward to serving you. Thanks a lot.